All right, guys, welcome to the first example out of 4. We're going to dive into pound USD and break it down from the higher time frame to a lower time frame and etc. So here we're on the monthly chart, as you notice, right? So I already see in the monthly chart that we are in a point of interest. Now, this is the money chart itself, but let's go to the weekly so you can kind of see what I'm talking about. So this is the weekly chart right here. What can I see that is already grabbing my attention is we have a untested QM right here. Now, because it's the weekly chart, we know that we can get some type of reaction. The same way that on the lower time frame, we will get some type of reaction. But because it's a weekly chart, that reaction can be huge. That's just common sense, right? So we're in a untested QM. I know where I'm at in the monthly time frame, which is a unmitigated wick. We mitigated the open, but the 50% is left unmitigated. So I know I can get a potential reaction from this. Not only that, we also have liquidity being fed into it. If you go here on the weekly, you will see we have this low being fed into this. So that also gave me another confirmation of why this POI can potentially give us some type of reaction. Now you're going to notice that on the higher time frames, we are able to capitalize on the reactions that they give us. For example, here, this was a reaction. That was a reaction. It gave us a nice counter move. 1, 2, 3, 4, 5, 6, 7 days. That's a reaction. Like I hear, price gave a reaction. 1, 2 days, 2 days worth of counter trend. So it's important to keep that in mind. So we're currently in this weekly point of interest. We have a untested strong low, right? Obviously on the monthly, what we see, the obvious that we see is run liquidity and breakup structure. That's the obvious thing that we see currently, right? That's all we have to work with from here to here, right? This does become internal liquidity. Yes, it does. But we can also get a reaction. It's an obstacle, right? We also have that low being fed into this. And then we also have the liquidity that we just broke down the weekly, right? So this is giving me a nice area to react from. So now that we have that in mind, remember we treat the higher time frame the same way that we're going to treat the lower time frame. So there's the weekly, all right? So of course, I'm not going to take a direct entry from here. That's also common sense. It's a big zone, it's huge. So once price came into this area, I went to the daily. Now I know this is a weekly untested QM inside of a 50% unmitigated wick. So I'm keeping that in mind. For all beginners just getting started, feel free to type it out onto your chart so you can know what you're looking at. And of course, you can see here, that would be the liquidity being fed into this. There's stops just below that low. So in the daily, what can we see here? Well, we see a QM, we see a strong high and a break of structure. Now, we need to confirm the bullish QM. Now we understand that a strong high creates a weak low, right? Automatically. However, we need to know where we're at in the higher time frame. We are in a weekly, monthly POI. So what does that mean? Remember, the higher time frame rules the market. We always use the higher time frames. We must. So let's put this in the perspective of if this was the 4-hour and this was the 15-minute, right? I would be looking for longs, correct? So the same thing we're going to be doing on this example. Just because it's a monthly and weekly I'm not going to just be looking for shorts. No, I'm keeping in mind we're coming from a higher time frame POI. So I'm going to be looking for long-term longs, meaning this high can get taken out. Are we going to get a reaction from here? Yes, we will. Yes, we will. That's an obstacle. All right. So let's get into the details. Like that. Cool. So 4 hour. Now we need a Quasimodo to confirm our range. So let's place out real quick. So, okay, so here we have our QM. We now have our strong low. Now on this current range, let's make it'll be a strong low, but from the higher time frame range, which is from here to here, it's considered a weak low. All right. So now listen carefully here. All right. This red dot is right here. All right. That is the higher time frame range low. All right. So this is the bigger range from here, this red dot, to this red dot. Right. Now, inside of this range, we have another range. We have this range right here. Took out liquidity, broke structure. We always use the closest structure point as a BOS. All right. So this also needs a low to confirm the range. So that's where these two share the same low. That's what I meant in the beginner's course. These two share the same low. You see that, right? So keeping that in mind, this is a point of interest. I can get a reaction from this area right here. This is an entire point of interest. The entire wick took out liquidity. That's my POI. You go in the 1 hour, that's how it looks. You see that? That's the entire order block. It's got liquidity. That's a POI. There is no way on refining this to, let's say, the 5 minute. If you try to over refine this, let's say, you will most likely just either miss the POI, or let's say you're taking a direct entry, right? If you try to over refine this, your POI will end up being all the way up here, for example. That's why we don't refine it the way that the majority of smart money traders do. Right? We leave it like this. This is a POI. This is a big candle. We cannot change the fact that this is the candle. This is what it is. And we're just going to leave it as that. Let's not try to change nothing. That's the candle. Now, I hope that makes sense. That's the block. That's how it looks. That's how big it is. That's what we got to use. That's what we see. Trade what we see. So I know I can get a reaction from here. Now, like I mentioned in the session video and on the Asian session video, right? We trade only after Asia is created, and Asia is obviously used also as liquidity, right? So let Asia play out. Let it finish. All right, so Asia 17 to, there you go. So Asia is done, right? It's finished. So now I can start looking for my trades, right? Whether it's a short or whether it's a long, right? Now look, price is reacting from this area right here. You see that? It's reacting from it. There's a reason. There's always a reason for everything. It's reacting from it, right? So now I need everything else to line up. So from here to here is a new range. So let's go back. Let's go back to the higher time frame. You cannot get lost. So you understand your bigger range, right? You understand this is a range in itself. Okay, this is your current bigger range. Yes, this is your other bigger range, but your current range right now is that you're dealing with is this one. So here's where your focus is currently at. So what does that mean? That means that you are counter trending. You are currently counter trending inside of this range. All right. So now let's go down back to the 15 minute. Here we are. So price created, it's high, and now we have our low. You see that? That's our new range. Inside this range, we identified our internal range liquidity. Okay. Not only that, we also have Asia session liquidity. So we have internal and Asia. And if we can get a false failure swing, let's say, right? Well, not a false failure swing, but let's say a false POI, a false move, failure swing, that would make it even better. That would create equal lows, and then we got Asia session, confluences just line up, right? So once we identify our current trading range after Asia session ends, we identify our liquidity, and now what do? We go to the higher time frame. So let's go to the 4-hour. Now, because we're in a 15-minute range, 4-hour will be a nice place to go. Now we can go to the daily, and whatnot, but there's not going to be much there. Now, you're asking, well, how do you know? Well, with enough experience and back testing, you're going to realize that when you're at the 15-minute, 5-minute, going to the daily doesn't really make much logical sense. Start from the 4 to the 1 and below. So if we go to the daily right now, you see, that's how it looks. But on the 4-hour, we see this imbalance right there. We choose the closest POI to the liquidity. Is it the unmitigated wick? No, it is the imbalance price action. You see that? That's the POI that we're going to choose. There's the liquidity right there, just above this. The only way we're going to choose the unmitigated wick is if this fails, then that creates a reason for price to come into there. Making sense? All right. So now let's go back to the 15-minute. Delete this. All right. So you understand where you're at currently. You understand what happened, and now you're understanding what's happening. You're keeping all of this in mind. I know it's a lot. It is. Right. So that's our POI. Now we got 2 ways to enter: direct or confirmation. If you're going to take a direct entry, that blue line right there, right, this price level right here, all you're going to do is break it down to lower time frames and see where it lines up with. So let me go down to the 1 minute. If you're doing a direct entry, do not go to the seconds time frame. The 1 minute is the lowest you will go. It wouldn't make absolutely no sense to go any lower than that. So you see, it lines up with this order block. Right there. That's where price lines up. So let's drag this across. Just like that. And like I mentioned, right, this price level does not have to be perfect. If it lines up with a block and it's like 1 or 2 pips away, then just adjust it, because the market's not perfect, so neither are the price levels. So just adjust it. So you're going to use this entire PR right there. Back to the 15-minute. All right. So now let's play this out. So price comes into here and near misses it. You see that? Near miss. Now there's another thing you have to know, that the broker data is different. Every broker has their own data. That's why you do not depend only on TradingView to enter your trade. You have to look at your MT4 data, the broker that you're using to trade, because every broker has different data. On the MT4, this could have failed. On the MT4, this could have probably not been an imbalance. On your broker, every broker is different. All right, so you have to understand that. Okay, so for me, if this was a direct entry, I would have been tagged in simply because I add spread and I use my broker's data. I don't depend solely on TradingView. And then again, look at the difference. This was only a 1 pip. Yeah, 1 pip, around 1 pip. Yeah, so 0.7, 1 pip, right? 1 pip. If you add spread and everything else, you're tagged in. Again, the market is not perfect, right? And again, make sure you check your data, your broker's data. So let's play this out. Now, you see here how I have London, time and price. It came in during London. Okay, so now let's look for a confirmation entry. So we're in the 15-minute time frame. That's where we see the range, clear as day. So the only logical thing is to use the 5-minute below to look for a confirmation entry. So let's play this out. So you see that we have already our strong low. Now we need to create our high. All right, it's created. Now let's dive into this real quick. This looks very complicated, okay? But let's break it down. Now understand this, right? Here's our strong low. That's the breaker structure, right? Price broke structure, meta retracement, broke structure once again. So what is this? That is inducement. That is inducement with internal liquidity right here. That is inducement. That's why we have model 1 and model 2. Remember, don't forget about your models. If price breaks structure, retraces break structure once again. There is stops resting above. There's supply and demand traders looking for a short, take them out, then we enter, right? And then we have the other model, which is price break structure, pulls back, failure, swing, takes it, drops. This is why it's important to keep these two models in mind. We react and we adapt, right? So now price came in here around 10:35, which is New York, my time. So price went up. So let's say, yeah, so let's say that you were looking at price to come down here to its POI. It didn't come in there, and then it took off. This could have caused, let's say, fear of missing out, but you have to understand there's a reason. There's a reason for everything. If price didn't tap the higher time frame POI or was even near it, right? There's a reason why. That's when you're like, okay, if this is not model 1, then it has to be model 2, right? And then that becomes the inducement. Imagine how many people will go long here. Just think about it. It's a fake POI. It's false, right? So that's why we got 2 models. Now, you may ask, why did price react from here? There's always a reason. Price reacted from this. That's reaction. Because again, look at this range, and this range are being shared. So it has all right to react from here. Internal liquidity, that inducement to this POI. You could have short there, exited here, longed here. Range inside of a range, there's always a reason. Now, we're not going to get into stacking trades or hedging. That's in the advanced because it's much more harder to do that. And all of you are just getting started with this strategy. So we got to focus on catching high probability trades before you guys get into catching, shorts and longs, ping ponging up and down. I know some of you are going to go straight into that, but I'm going to tell you right now, it's going to be tough. All right. So price came down. Now remember, once we identify our liquidity, we have to go to the higher time frame and see where price can come into. The market is fractal. I hope you're seeing how fractal the market is and how we use every single time frame. If we only stick with, strict rules of time frames, we can never trade this way. At least not the way I trade. It would be impossible. The logic wouldn't make sense. You wouldn't have found answers to why things don't work out. The market is fractal and just the way it is, accept it. So on the higher time frame, after we identify our liquidity, right? Our inducement liquidity, right? The only thing I saw, the nearest POI was an unmitigated wick. That's all I saw. So I went to the 1 hour. That lines up with what? With an order block right here, right? In this case, this is a rejection block because it has rejection from the top and the bottom, but we used the body because most of the volume is in the body. Like I mentioned, it lined up perfectly. I didn't use the 1 hour. I used the 4 hour unmitigated wick and it automatically lined up with this block. Confluences. All right, things line up. Everything has to line up. You can't use one concept itself. It has to make sense. And by surprise, look at this. This is a what? This is a strong low. Also a untested Quasimodo inside of a POI. Things just click. Things just make sense. Okay. It is a lot. It's a lot going on. It is. All right. And this would have been your entry. And again, on this broker, it didn't tap. It didn't tap for like 0.02 pips. Every broker is different. I would have got tagged in. So that would have been a nice trade right there. Entry here, entry here. You see how we entered here, and then this was confirmation. All right. Our overall target for this range right here is this one right there. So let's play price, hit TP around 13, that's 3 o'clock. Now let's step back. Let's go back to the higher time frames a bit. Let's see what's going on. All right, we're entering, or well, we were already in here, but we are inside of this huge POI, right? Which is, I believe, 4 hour, which came down to the 1 hour, same thing. There was no refinement to it, right? Now, I want you to understand this. Look at the time of day, right? It's not even our time yet. So we don't care what's going on or what's happening here at all yet. So let's play price forward. Asia starts already. Let Asia in. All right, so Asia ended. All right, hold on, give me a second. Make it a little bit darker for you guys. There we go. That is Asia. All right, that is Asia. We know our overall target here. Now, why are we targeting this? Why are we not so worried about this right here? Because we're coming from a higher time frame POI. Again, if this was, let's say, the 4 hour, right? And this was, let's say, the 15-minute, you will obviously be looking for longs. But you know you have this POI right here, this obstacle in the way. It's just in the way. We'll get a reaction. You know, we react there. We'll get some type of reaction. But we know that our overall target is over here, external range liquidity, right? We're lining up with the higher time frame, right? So for people that trade London, the kill zone right here, London kill zone, yeah, that's the kill zone, 1 o'clock. So the kill zone, I believe, let's see, yeah, it gave nothing for you guys. So you would have got nothing. Like I mentioned in the sessions, you have to be able to accept the fact that if you trade only London, you probably might not get nothing. Because if it doesn't happen during London, then it's going to happen during New York. If New York does not give you nothing, then most likely it happened during London. All right. So you're not going to always get an opportunity in your session. There's an opportunity every single day, but it can happen sometimes during the Asia session. That's just something that's out of our control. It is what it is. We move on. So London, guys, you would have got nothing. At least nothing that I would have saw clear for me to take. No high probability trade. I would have taken absolutely nothing. I would have not shorted here. There's no inducement. There's no liquidity. There's nothing obvious. And we're coming from this. So a high chance that's going to get completely violated. Right? So you're starting to see why it's important to understand and know the logic. So let's go back to the daily time frame because a new day opened. So here in the daily, we had this huge POI, but this one actually had a refinement. Inside of a higher time frame POI, there's gonna most likely 90% of the time, not 100, 9% of the time, there's going to be a breaker. Inside of a higher time frame order block, there's gonna be a breaker block. And on the 4 hour, we saw the breaker block right here. Here's the breaker block. Here's the open. Here where it came down, right? This is the entire breaker right there. That's the price is coming into. See that? So if we go down to the 15-minute, this was London. This is still London. So let's go back to the 1 hour. And see what happens when price comes up here. All right, now price is here. Now, like I mentioned, right? This is a range within itself. This is internal liquidity of this range. So now we're taking internal liquidity of this range. So what does that mean? We're gonna get a reaction. But we're not looking for overall long-term shorts because we're coming from a weekly, monthly POI. There's a range inside of a range. We already fulfilled this range, it's done. Our focus now is on this one. You see that? So I know I'm gonna get a reaction, so we can look for potential trading here. All right, now I don't wanna make the video too long because these were the main ones that I wanted to cover, because these are the important ones because this is coming from a higher time frame POI. So there's the reaction. Now, we didn't get anything actually during New York either. So like I mentioned, there is days that moves may happen during Asia, during London, during New York, right? Sometimes we won't get nothing. It's just, it is what it is. It's out of our control. There's absolutely nothing here for us to take whatsoever. It's just not even clear on the 15-minute either, nothing. By this time, it was already Asia again, and we don't trade Asia. So nothing London, nothing New York. It was just pretty much a day where we didn't trade. Now, of course, there were opportunities in that day, right? Maybe the 1 minute, maybe the seconds, right? The algorithm doesn't stop, right? But for us, there was nothing clear. And now it just is what it is. Now, this POI right here, what do you think this becomes? I'm gonna give you a second. Let me go to the higher time frame a bit, kind of give you a quick understanding. What do you think that happens to this POI? Straight out. Exactly. A breaker. You see that? Do you see that? A breaker. This is a higher time frame POI that was not respected. It was violated, meaning if a OB or POI is not respected, it turned into a breaker. And we fulfilled our overall target, like I mentioned in the beginning. I hope this example was very helpful. Rewatch this example. Any questions, let me know. On to the next one.